Hey guys, Joel Frank here, market analyst for YouTrading. And in today's video, we're going to be taking a quick look across markets, talking about what's been happening at the start of the week. So let's jump straight into it, actually. And I think the best place to start is probably with stocks, which look to be building upon the pretty healthy bounce that we saw last Friday. We're seeing a lot of technical strength right now for the S&P 500. You can see here it's been last week it bounced very, very strongly at its 200-day moving average, which is there in green, and its 100-day moving average as well, which is there in yellow, and as well the downtrend from the 2022 bear market also offering strong support. So, technically speaking, for me, now we've made it above the 50-day moving average. If we can get above this 21-day moving average, and also this, short-term resistance area, which we look to have already surpassed, which is around 4050, we can retest these recent highs purely on technical strength. Regarding the fundamentals, obviously we've had this big repricing since the start of last month of Fed tightening expectations, which is why over the same time period you've seen US short yields rallying. You can see this like massive jump in the 2-year yield. You've seen the 10-year yield up as well. Um, but the stock market's been remarkably resilient to these repricings. So, a bit of room for some more technical strength. But are we going back to all-time highs? Well, when we've got an incoming or a likely incoming earnings recession, I wouldn't be betting on a rally back to the 4,800 area just yet. But we can certainly chop around this 4,000 to 4,200 area in the near future. Um, But yeah, like regarding the main events we've got coming up this week, let me bring up the calendar and we can talk about it. Out of the US, which obviously always drives the narrative, you got Fed Chair Powell testifying semi-annual testimony in front of Congress. The first day is always the most important. That's where he sort of uses the platform to reveal any new important information regarding monetary policy. So eyes on this Tuesday speech, sort of this time tomorrow. Then he does speak again for a second day, and there is a Q&A, so he might give some new information, but usually it doesn't happen. In terms of what else we got out of the US, JOLTS data, very, very important, a gauge of the current level of demand for jobs in the US economy. As you can see, it was very, very strong last month, 11 million. Expected to ease a little bit, but 10.5 million is still very, very strong. Still way above the number of unemployed people in the US at the moment. Then, on Wednesday, we've also got the ADP, which is sort of like the preliminary for the NFP number, the official jobs number, which is on Friday, which will be really the main thing this week. We're expecting the pace of job gains to ease quite significantly from last month's bumper jobs numbers for January. But 224k jobs added in February, that's still very, very strong. Wages seen remaining steady, unemployment rate seen remaining unchanged at multi-decade lows. So yeah, everything this week likely to show that the US labour market remains very, very hot. But given that we've already had this big repricing in US interest rates and interest rate tightening expectations, is it going to trigger any more hawkish Fed bets? It could if we get upside surprises, and that could weigh on stocks potentially. But if you come in as expected, or even a tad weaker, stocks are just looking potentially pretty good this week from a technical perspective, and the fundamentals could feed into that. Let's quickly look at a few other things like the Dixie easing back. This is probably more of a weakness as a result of its safe haven status as stocks rally. I don't know, we have faded quite a bit in the last couple of days, but I was expecting it to test this resistance area, which we never quite got to. Maybe we won't get to it at this point if stocks keep rallying. It's the wrong symbol. Euro dollar, you can see rallying back to above its 21-day moving average towards its 50-day moving average. Sterling sort of hovering around that 120 level still, chopping either side, not too eventful. Dollar yen running out of steam ahead of a retest of this 200-day moving average. This will be a key area actually for dollar yen. Like if it's not able to get above the 200 DMA, that could spell a restart of the bear market. for this pair that we had in the end of last year and into the beginning of this year. That's what I'm thinking anyway. This trend could re-establish itself and we could soon be back at fresh annual lows for dollar yen. Let's quickly have a look at some other asset classes. Gold stabilizing around 1850. I mean, yields are pulling a little bit lower, so that's helping gold stabilize a little bit and the stabilization of the dollar as well. And then if we just look at US WTI front month futures, this is a CFD that tracks it anyway. We had the pop higher last Friday, the breakout from this pennant structure. If stocks remain resilient, if the dollar keeps gradually weakening, we probably can test the top of this range that we've been in, above 80 in the sort of 82 area. But yeah, oil very much for now following the macro story rather than any sort of supply side specific stuff. Um, but yeah, guys, there's a couple of other things on the calendar as well that we should keep an eye on. Like if you're trading the Aussie, you got the RBA. They're lifting interest rates by 25 basis points during Tuesday's Asia Pacific session. Governor Lowe then speaking tomorrow. Anybody that trades the Swiss franc, S&B chairman Jordan speaking. Then you got the Bank of Canada raising interest rate. Oh no, holding interest rates. Excuse me. They've already paused their interest rate hiking cycle, which a lot of people think could be like a lead indicator for when the Fed pauses theirs. ECB President Lagarde speaking as well. That's all on Wednesday. Then on Thursday, well, actually, it's the Friday Asia Pacific session. We've got the Bank of Japan. Um, they're very interesting at the moment because you've got this new guy coming in who's going to be the governor, and is he going to back off from the ultra accommodative policy? Um, and then Canadian jobs data as well, and then obviously the US jobs data. But yeah, there's a lot to be thinking about in the G10 front. A lot of central banks, a lot of central bank speakers. Um, but yeah, guys, that's pretty much everything that we got coming up this week. I hope you all enjoyed the video. I hope you all found it informative, and I will see you all in the next one.